We are live. Well, Matt, thank you for jumping on today.
Yeah, thanks so much for having me. Excited to be part of it.
Cool, not at all, not at all. So, I guess first things first, for those that aren't familiar with your background and your work and everything, are you okay to give us a brief introduction to who you are and where you're at?
Yeah, absolutely. So I'm Matt Gittleman. I run a family office out of the DC area, JHH VC, which is a early stage, purely focused on venture capital firm. And so we invest in pre-seed, seed, some Series A deals. Our check sizes are quite small. They range from as little as 25K and can organize some SPVs up to 250K or so. The family that I work for has been at this as essentially an angel investor for the better part of 30 plus years. And so when I joined just about 3.5 years ago, we already had 100 active portfolio companies. Um, we're up to about 145 or so now. I'm doing 10 to 15 new deals a year. This year might be a little slower, which we can talk about at some point, but I'll probably end up with 6 or 7 new deals at this point, as I look at towards the end of the year. And yeah, I mean, I've been at this for, as I said, 3.5 years. I spent 4 years working with a great group called Blue Venture Investors doing early stage cybersecurity investing, really kind of soup to nuts on all of those deals, sourcing diligence, and then would bring them to IC. Um, I really kind of caught the sort of startup bug though much earlier in my career where I worked here in DC at a company called Living Social. I was employee 50 or 60, something like that. Watched the company grow from 50 employees up to 6,000 employees, back down to 3,000 in about a 3-year period, and saw just absolute tremendous growth. Obviously some kind of retraction from the market as well, as and a lot of lessons learned and great experience, seeing a company of that size and scale grow, 20, 30 employees hired every single week, kind of in
Wow.
cohorts for a number of years, or for a year or so. I ended up moving up to Boston afterwards, where I worked at a couple other venture-backed startups in the kind of enterprise kind of sales enablement space, as well as kind of in a marketplace deal for kind of expert networks. Both provided just sort of tremendous experience and visibility into kind of the early stage problem sets that I think I now look at day in and day out, and see companies of, all across all sectors, struggle with and succeed at and have to just face. And so that kind of startup bug kind of got me going, and came back to DC for business school, where I spent a couple years, there obviously, and had an internship with a venture capital firm called Core Capital Partners, where I kind of cut my teeth a little bit and got my feet wet in venture, looking at enterprise SaaS kind of Series A type deals. And yeah, just really loved that world, and have been sort of at it sort of ever since for almost a decade at this point.
Wow. That's a lot condensed in there to a 45-second elevator pitch. So thank you for running through that. I mean, just off the back of that, really, your experience in the whole startup, on the non-investor side of the house in the enterprise itself, do you sort of attribute quite a lot of value to that now being on the venture side of the house?
I think that having seen early stage companies for as long as I did, has really helped me. I mean, I think it's the start of what a lot of investors kind of call pattern recognition. I saw it at an individual level within 3 different companies, and I saw the things that at least in hindsight I can say I think worked and I think didn't work. Living Social was just a tremendous sales and marketing organization, and we saw an absolute, there was so much capital being poured into that business at that time, that the more we devoted towards marketing and sales, the more revenue we generated. The LTV CACs weren't obviously particularly strong, as you can imagine when you start just pouring that much into it. But the idea is that they would catch up, and sometimes that can work, and sometimes it doesn't. And in that case, it didn't quite work, I think, as they had expected. And I'm saying this certainly from the perspective of someone who didn't see any of these numbers. I'm just kind of looking at it with hindsight of what I kind of know now about how these organizations can run. And then I saw, incredible efficiency at, some of the places I was up at Boston, in Boston. And back down here in DC, looking at companies all across, the United States and internationally in some cases, a lot of those experiences, I think are, one, give me some empathy for, how hard it is. I certainly can't say I sat there, as a CEO wondering if we're going to make payroll next week, which some startup founders have to deal with. And I, feel grateful for that, but I also have seen a lot. I think that, someone who's coming directly into the investing space may not have as much experience with.
Got you. And so what kind of got you into the whole venture investment side of the house? How did that come? Was that like an aha moment, or was that just a happy accident in a way?
Yeah, well, when I came back to business school, when I went to business school, I should say I, knew that I wanted to kind of figure out what my kind of next step would be, and I always knew that the MBA was going to be a good opportunity to one develop the skill sets and toolkit that I just didn't have coming from a purely kind of ops background. I didn't have as much sense on the kind of financial side of the business, and so. Georgetown has this fantastic program that had been a couple years old at that point called Venture Fellows, where they basically bring 7 to 10 or more venture firms in and sort of say, hey, we're going to set up a year-long internship, and for the semester, the school year, you're going to have a part-time kind of schedule with that firm, usually on Fridays, and then a full-time schedule over the summer. And so by the end of that 12 months, you kind of have this year of experience that you wouldn't have had otherwise. And so for me, it was really just an experiment. I was very interested in kind of early stage companies in general, and so I knew that if the venture side wasn't something that became of interest to me, I could always go back and look to jump back into that kind of entrepreneurship kind of role, whether a founder or jump into a company, that kind of seed Series A kind of stage. But I just found that venture afforded me an opportunity to talk to people that were, candidly just smarter than me all day, every day about things that they were super passionate about. And that experience has really continued for the last, 7, 8, 9 years. And I felt fortunate to do that.
Love that. And I guess just last question on this, but what is it about the whole early stage organizations that lights your fires? Because we're on the recruitment side of the fence, and we'll speak to people that have been at large enterprise, then done a startup, hated it, it's not the same at all. Or flip side of the coin, there's people that do the startup and then go to insert large corporate here, and it's just not the same at all. So for you, what is it about the whole early stage that gets you going?
Well, I think in some ways it's probably similar to what you all are doing, right? It's about people, and more so than anything else, it's about finding people that you believe in that can be successful doing the thing that they say they want to do. And so, where you look at a later stage company, the later and later stage that company becomes, the more you're actually investing in the numbers behind the business than you are the business itself. And I think with those pre-seed and seed stage companies, you're absolutely investing in the idea, but you're investing in the people being able to execute off of that idea. And I think that to me is so much more interesting than having to uh, invest in the sort of the purely underlying economics of the business, and understand if the people in charge can kind of continue to deliver on that economic kind of promise.
Mhm. I guess that must play a huge part, like you say, in especially in pre-seed and seed, when maybe sales are more founder-led, or there's certainly a lot more founder involvement. If you're going to buy into the founder and their story and the trust to sort of deliver on what they're saying they're going to deliver, then potential customers are too. Have I drawn that comparison right? And please feel free to say if I'm way off.
I think those early sales days are so multifaceted because not only is the founder and the CEO, the co-founders having to sell to customers, they're actually having to sell to prospective employees as well. If they want to hire and if they want to find a co-founder, probably the most important sale they'll ever make is selling their vision for this business to someone who's going to put their entire life on hold and probably a pretty good salary to jump in, take a terrible salary, promise of equity, and go build a business with them. So, sometimes if you come in with a co-founder who, is a complete natural fit because you've done this 2 or 3 times and or you've just worked together for, 15 years, those are different co-founder stories than the one where someone came from, some new organization and they've actually sold them to come and say, hey, you're the right fit to be the CTO of this business, to be the COO of this business. And I'd like to bring you in as a co-founder. That's probably the hardest sale you're ever going to make. And so if you can make that sale, the fact going to a customer, hopefully should be not nearly as challenging.
Got you. So founders out there, brush up on the sales skills.
That's right, for sure. I think we all need to brush up on the sales skills. It's across the board.
Indeed. And this kind of like leads into, I wanted to ask you around your whole, approach to investing at the moment and what you're seeing in the space. So I guess with the investments you make, you mentioned sort of typically 10 to 50, maybe slightly less this year. In fact, let's unpack that for a moment. Why slightly less this year as opposed to maybe previous?
We don't have a specific mandate on how many deals we want to get across the finish line. And so, I think that, we are seeing valuations bifurcated more and more between the sort of the haves and the have-nots. Companies are raising more money at higher valuations than they were, 12 months ago, than they were 24 months ago. So there's certainly that part of it at play. Candidly, we're also writing slightly larger checks. And so, it's not to say that we're going after a, purely high conviction, highly concentrated portfolio approach. It would be almost impossible to say that with 145 companies that are currently active. But I think that, as I've spent more and more time in market, getting to know, other institutional investors, having a portfolio that I'm trying to support and get through to that, from pre-seed to seed and seed to A. And I should clarify when I say support, I mean as much as I can from a, a solo kind of operator seat, solo GP here standpoint, where I'm introducing them to other investors, giving them market feedback on what to expect in different rounds. Um, I think the reason we've done fewer deals is sort of a combination of a number of those factors. Candidly, we've, just not seen things that have just been as exciting to us when you combine, the dollars raised and the valuations that we've seen, paired with the fact that when we are investing, we've written slightly larger checks. And so, from a capital deployed standpoint, it's actually been kind of on parity with 2024. Maybe a little bit lower, but we're also organizing slightly higher SPV rounds in those deals, and we've done more follow-ons this year as well.
Got you. Okay, cool. That makes sense. That makes sense. So the sheer number of deals you're doing isn't the sole or the metric to look at for what's the word I'm looking for here? Yeah, sort of barometer of where we're at.
Yeah, I think that's probably right.
Got you. And so what do you look for in organizations? I know if we separate off the Blue Ventures piece as a sort of separate
Yep.
piece to talk about, but with the family office JAH now, what's the what are we looking at? What are we looking for? What excites you when you see something?
Yeah. Well, I've described this in a lot of different ways. But there was a firm out of New York called Steel Atlas that we've co-invested with before, and they wrote this great blog piece about the concept of data gushers. And I like to start with that kind of label because I think one of the things that's been most interesting to me over the last couple of years is some combination of what I would call like companies that sit somewhere on a spectrum of data as a service to intelligence as a service, um, paired with some sort of kind of vertical AI kind of approach. Um, every company these days, of course, is an AI company. It's just sort of depends. Is it slide one in your deck or slide 11 in your deck, right? And all of that certainly matters into how you define AI within your business, but everyone's using it somehow. For me, I think of it as like is that AI is sort of going to eat the world, but AI can't eat what it can't see. And so if you're building a novel data set or aggregating disparate data sets, solving unique pain points and efficiencies, blind spots within your industry, you're going to have an advantage over the rest of the market. And so at the core of kind of what we're looking for is founders who have a unique insight about data that they can bring together, that they can build with the intention of solving those high value problems. And I can kind of boil it down to say, if OpenAI can't find the data, I kind of want to see that company. It doesn't mean that we're gonna,
Okay.
necessarily invest, but it kind of helps set the context for, what is it that's going to make your business different and defensible.
I got you. And obviously nothing that's in the works at the moment behind the scenes, but is there an example maybe you could draw on on an organization you've invested in and kind
Oh,
of why?
absolutely. Yeah, absolutely. I like to give the two best sort of examples I have today that kind of paint this picture of both the novel data set side as well as the aggregated data set side. Kind of can be shown here. So the first is a company called Genlogs. Genlogs is a company that is using cameras, sensors, computer vision models alongside billboards on highways to track freight traffic, to track trucks. And the big sort of pain point problem set in the industry, this is oversimplification, is that 1 in 3 trucks are empty. They're deadheading. And so, if you think about what that problem says, is it's a climate problem, it's a revenue problem, it's an expenses problem. There's also a lot of fraud in the industry. And everyone who is essentially, and again, this is an oversimplification, who's tried to do this before has said, hey, take this sensor, put it on your truck, and we're going to track you and give you the data back. Or download our app and we're going to, keep it open and we're going to again track you and use it. But there's, 500, 600, 700,000 trucking companies, freight companies in the United States alone. To
Wow.
get to all of them would be impossible. And so building critical mass to get a data set that makes sense isn't really possible. And so Genlogs has created this novel approach to defensible data where it doesn't exist. And so, whether you're talking about fraud or you're talking about revenue, expenses, just, shippers, brokers, I see a world where, hedge funds who want to know about macroeconomic activity in the United States are going to care about this data. And so it's an incredibly novel data set, fairly defensible as far as they come and building tremendous value in the industry. And then the other is a company called Cloverleaf AI. They're out of Denver, Colorado. They're actually raising a Series A right now. But they are aggregating all of these disparate data sets. And then, so they've taken essentially every town hall meeting across the country. They're using all publicly available, using content analysis tools to understand what's happening at a kind of micro and macro level, essentially uncovering government opportunity for the commercial sector. And so, again, an oversimplification, but if you're an EV charging company based out of Columbus, Ohio, and some suburb of New York and New Jersey starts talking about EV charging, and this that company in Columbus all of a sudden uncovers that opportunity, goes and helps them build the RFP, and they're going to be somewhere near the top of that stack as they look to go and win that business. But it certainly uncovered the opportunity for them through that data set. So, that data set is not as locked down, right? Because others can go do it too, but there's a whole lot of elbow grease and know-how that goes into it. And they certainly have a great first mover advantage there. And they've been growing quite nicely.
I was just about to ask you how important is first mover advantages in this world?
I think it sort of depends on how you're kind of going about it, because in the case of a cloverleaf, if someone else had gone and done this first, they would have been in real trouble. It would be very hard to kind of catch up to them in that. In the case of Genlogs, there have been a number of companies that have tried to figure out ways to track freight traffic, and some have been fairly successful. But with their novel approach, they have a first mover on this new data set, and it is defensible as a result of that. But they are by no means the first ones who have tried to build a comprehensive database of freight movement around the United States.
I got you. I got you. And there was a point you touched on earlier, Matt, around the support you would give to pre-seed or seed organizations. I know you mentioned single person GP at the moment, but there's still value in introductions or in making things happen in a certain sense, or however it might be. How important is the whole idea of what can the investor do for you? If you're a founder right now, what should you be realistically looking for in an investor?
hmm I think, there's a lot of capital out there. It's not always easy to get, so I don't want to oversimplify that by any means. Um, but you're going to have this person on your cap table for likely the stages we're investing, 10 years. The average has gone up from 10 to, maybe 11 or even 12 years now at that kind of pre-seed to seed stage. Um, for us, we think of ourselves as, because our checks are so small, fairly non-dilutive capital. And we're as dilutive of everybody else, obviously, but our checks are just so small that, in a lot of cases, we can kind of tack ourselves on to the end of a round. We can, invest in a company sometimes that isn't even raising a round, because if we can sell, going back to that sales piece, if we can sell ourselves as a value add beyond the size of that check. Um, and so, this leads into sort of something else that I've spent a lot of my time on, which is a group called VC and DC, which is a large mailing list, essentially, membership organization of venture capital investors, both institutional and corporate, where we have close to 800 members now, across close to 400 firms. And with that, when you write it as little as a 25K check, I go to founders all the time and I say, listen, my 25K check can slot in here nicely. It's fairly non-dilutive, but what you're going to get is, as many sessions, as many times as we need so that I can understand the business at that moment in time and then introduce you to the five, six, seven, 10 or more investors that are in my network that I think are a really great fit. I think a really great example of that as far as is value add in a way that I think I directly got access to a deal was, meeting an investor at a conference saying the round was oversubscribed, it was done, it was closed, but but this conference was in Chicago, the founder was in Texas, and I was sitting here most of my time in DC with this nice intersection of defense, of government contractors, of primes that are sitting right in our backyard, both on the institutional side as well as the corporate side. And so, I went to this founder an hour later. I said, hey, I think what you're doing is really interesting. And by the way, I'm hosting an event in DC in about a month where I can introduce you to some of the major investors investing in these sectors, something that you wouldn't be able to get in an Austin, in a Chicago, in a New York, probably not even in a San Francisco. And so that unique place in the market has really afforded me an ability to sell that 25K check, that 50K check, that 100K check into a business, whether they need it or not.
I got you. And so the VC and DC event, I've personally been to some of them, and it's been awesome. So I think when you call it like a
Thank you.
big mailing list there, it's a very modest approach of what you're really doing there. And you kind of touched on some of the value points, but are you okay to rattle through some of the numbers you've got? You've got 800 member organizations, right? Something like
Sure.
that.
Yeah, we have about 800 members on that mailing list. We have across about 400 funds, two-thirds of which, actually, that number is closer to about 60% now as we kind of do a little more expansion here, sit somewhere between Richmond, Virginia, and Baltimore, Maryland. The other, 40% are sitting somewhere, mostly the rest of the country. We've got folks in New England, New York, a big contingent in the Southeast and certainly Mountain West, Midwest, and West Coast as well. So we're really all over, and we've become, I think, a good kind of nexus for folks that are coming into town, or investors that are coming to town. We try to get them to attend some of the events that we host, and so adding to some of those numbers there, we will have hosted by the end of this year about 24 events. 12 of them are a sort of simple set it and forget it happy hour we host for the kind of venture capital community here, where we'll get 20, 30, 40 maybe investors each one of those. Um, and we actually we run all of our events across a platform called Luma, and I think we'll have had around 2,500, individual tickets kind of issued to our events this year. And so, I run that with a close friend and colleague, Bill Collier, who runs Noblest Ventures. And we've really had a great time just sort of helping build that community. Our kind of mission statement is all around connectivity for the kind of connective tissue piece for investors in this ecosystem, not only to each other, but to the rest of the country. And so, the idea is that as we get better connected here, when those investors leave town, go and meet founders outside of town or in town, they're also bringing in more and more of the kind of VC and DC community to be a part of that. And so, I think a great example of really, anecdotal success is a company actually that you and I met, or that we're invested in and you met just a few weeks ago, called Prediction Guard, which is based out of Indiana, out of Purdue. And they're a security layer for sort of large language models. And that round came together through a lead investor who was here in DC, Sovereign's Capital, and they started making introductions. And they made introductions, I'm sure to other folks as well. But the VC and DC community represented, I think, 90% of that round.
Wow.
And as we add more and more members, obviously that number becomes easier and easier to talk about. But these are people who have attended our happy hours on a fairly regular basis, who have attended our, venture and startup gala, or our missions and markets events, or our events in Venture Atlanta. They're people that are seeing each other more and more. And I think that type of kind of connection, venture is very much a relationship sort of based, especially at this stage, right? Is very relationship based. And so making sure that people and firms are more top of mind within our kind of our network, our ecosystem, I think is hopefully where we're going to see this organization thrive.
Yeah, I think that top of mind piece there. I've had a lot of people talk about that, and just being in the room is is so much value in that. Now, I've got two questions here. That the first is more of a how important is the whole face-to-face thing? You kind of touched on it there, but these events are largely in person, right?
These events are all in person.
All in person.
During
Yeah.
the first few months of the COVID-19 pandemic, we did try to host a virtual one, and it was not something I want to recreate.
Understood. Okay, understood. But with that, it's the in-person thing seems to be. I don't know whether it's the amount of noise in the industry. If you combine all the LinkedIn and email outreach and all this kind of stuff, it seems to cut through the noise in a really nice way, where you get the right people in the right room, you have the right conversations face to face with people. It's kind of drawing it back to that, which is hugely valuable.
Yeah, I think there's obviously a spectrum of how people sort of interact on the internet, from just absolutely terrible to nice normal human beings. But that spectrum of in person is much tighter, and it actually skews more towards the nice side of the spectrum, I think. People are much less likely to be that horrible side of the internet in person. And so I think as you have these conversations in person, you uncover deals that maybe otherwise someone wouldn't have shared in an email. They're willing to say things they may have wouldn't have put on a piece of paper. And it's not any investor here, breaking an NDA or anything like that. It's really more about a candid conversation that sort of meanders a little bit more and ends up in a place where you're saying, "Hey, actually, I think I might have something for you here." And that doesn't happen, over a very scheduled Zoom call or a phone call where, you've got your talking points and you're reintroducing the fund and you're talking about, the three things you're looking for, and then you kind of move on, right? That quick 30 minute, but in 15 minutes, over a drink or something, there's a lot more that can kind of I think come out of that.
Yeah, I got you. Absolutely. And so from a VC's perspective, it's the investor side, it's more of a networking piece there. From founders coming to these events as well, it's a chance to get in front of the right people. How important is, if you're a founder looking at, I've got this really cool bit of technology. I've spent the last year of my life balancing corporate work with my own sort of side hobby over here, my baby, which is now grown to something which I think is ready to take to market. How important is that whole networking and getting out there piece to get in front of the right VCs, the right investors?
Unfortunately, it's going to be your second full-time job. And I think, there are some investors, excuse me, some founders who come in with those networks. And that's great. They've, maybe they've been on the investing side, more likely than not, they have not. But those early days, those early conversations you're going to start having, I think are some of the most important you're ever going to have, because it's very unlikely that you're going to meet an investor today that will invest in the next few days. It does happen. We've done it, but the best time to meet your investor is a year ago, and so that's a sort of kind of cheeky way of sort of saying you really need to start developing those relationships as early as possible and start drawing a line in the sand about what you're going to be building, and then to continue to provide those updates over time and to build kind of real relationships, because trust doesn't happen overnight, in these early stage businesses when you're not investing off of 2, 3, 4 years of gap revenue. You're investing off of how well you know this person and their ability to execute and forecast and build a team and fundraise, and the list is goes on and on and on and on. But almost none of them are you know how much revenue have you generated month over month for the last 3 years? And that number changes quickly. That will change as you get into years 3, 5, 7, and beyond. But in those early days, it's all going to be about people. So, this is a little bit of a meandering way of saying it, but I think those founders, the more that they can network early on is going to it's going to pay dividends down the road.
Mm. And in that year, so just to sort of, play off your example there of, the best time to meet your investor was a year ago. In that year, what kind of things am I doing in there to prove my value or to show, Joe or Jim or Jill that I'm worth investing in?
Under promise, over deliver.
Oh, okay.
It's so common for founders to present a vision of how much growth they're going to have in that first year, in those first 24 or 36 months. But almost inevitably, companies struggle. It just takes longer. They struggle to hit those early targets. And so, however you can think about forecasting in a way um, that is realistic, I think that goes such a long way. And sometimes it's not about forecasting revenue so much. That's unfortunately almost always going to be wrong. I don't think in my time I've ever seen a company that has, really always hit their forecast. Even, I mean, I'm looking at our portfolio right now, even probably the fastest growing company in our portfolio, um, is still going to miss their revenue targets for this year by 40%. And it still remains the fastest growing company in our portfolio. But I think it's just it's such a good example of how hard it is because, sort of success kind of begets success in some ways, right? You think, okay, this company knows exactly what they're doing, they're growing fast, and the fact that they think they're going to grow even faster is great, or that they're going to maintain that. But then now you're starting from a higher and higher base, and so doubling that or tripling that revenue becomes, a cash on cash problem, which is, that much more challenging in a lot of ways. Um, so I think the things that those founders can do is, talk about what those next milestones are, and then check in every single time you hit them, and set milestones that you can achieve. And that doesn't, and unfortunately, that doesn't mean setting, low milestones. You have to have aggressive milestones, but you have to understand how to hit them. And then when you don't hit them, because that's okay too, you have to understand exactly what happened. And so one of the things I like to talk about for early stage founders is that financial model, that pro forma financial model. I think that's one of the most important documents, outside of, the investor deck, which actually gets you to want to look at the financial model. I think it's the most important thing you can put together because, I get this kind of spectrum of documents, and the first is a PDF of balance sheet and P&L. And that to me, is sort of, it shows me what they want to show me, but it doesn't actually help me evaluate the business any better. And so I kind of go back and I say, no, I really need to see kind of a, pro forma kind of Excel model on this. And so sometimes what I get back is, completely hard coded Excel spreadsheet of, this company is growing, by some percentage each month, and, there's expenses that are growing, sort of a little bit parallel to it, but there's no formulas baked in, there's no assumptions baked in. And so I go back one more time and I say, I really need to see the underlying, kind of formulas that help inform why your expenses are growing, why your revenue is growing. And then now all of a sudden you see, this is a sort of simplistic way of thinking about it, but like this embedded if statement, it sort of says if, top of funnel is, conversion from top of funnel to middle of funnel is, X%, and that's an assumption based somewhere else, then, times that by the conversion rate from demo to, POC, and POC to, kind of full contract. And I start to see all of their workings on this, and then they don't hit their goals that quarter. Maybe it's through diligence, or just, more generally speaking, they just haven't hit. And you sort of say, well, what happened? And they say, well, in our assumptions, we really didn't hit our POC, to conversion, and we think that here's where we need to now make adjustments. And so that understanding of your business and understanding where the bottleneck was, because if you hit your top of funnel numbers and you hit your conversion from top of funnel to middle of funnel to that sales call, and you hit your sales call to your, demo, and you hit the demo to the POC, but you've missed that other piece. You say, well, that's where we need to work, right? Or we need to adjust some other numbers somewhere else and increase our top of funnel, because we know we're actually not going to get better from POC to close, to a, full contract. So anyway, a little long-winded there, but I think,
No, no, it's
that's
useful.
the
Yeah,
kind
yeah.
of thing where I'm thinking about when it comes to, how I think about founders and how they set expectations.
Got you. So I guess it's tapping into that piece of like, if everyone hit their number all the time, it's all roses, it's brilliant, it's lovely. But if you don't, then it's okay, fine. It happens all the time. It's important to understand why and be able to pinpoint exactly where we've missed that or where the snag is or whatever it might be.
That's exactly right. Yep.
Nice. And Matt, pulling into the end of 2025 here at the time of recording. So I guess looking forward, what's your outset for next year? What are you excited about?
I think we're still in a pretty we're in a moment in time where dual use defense, gov tech, and cyber adjacent companies are going to be really front and center. And I don't think that's gonna change at all. Um, I continue to, I continue to think that, the industry that I'm in, where we invest, you have to be somewhat of an optimist. Otherwise, you really can't do this. Because I'm looking at, outcomes in 7 to 10 years or more. So, our strategy has really been continuously deployed capital over a long period of time, and that has created a portfolio that continues to have exits in sort of up years and in down years. Um, you know, I'm seeing a lot of people talking about how, 2026 is going to be sort of the year of kind of AI adoption, and I think that's a sort of easy answer to, what we've seen over the last few years. I mean, um, agentic AI is in a place where that it's never been before. It's as ready as it's sort of ever been to start taking on more and more tasks. And I think that, you're going to see more and more enterprises starting to bake that into the work that it's doing, that those organizations are doing. Um, but that's also going to probably create a larger and larger need for checks and balances on these systems. Things that, we have a couple companies in our portfolio that work on, like I mentioned, the security layer for kind of large language models. We've got another that's working on sort of the GRC piece for kind of AI compliance. But they also work on implementation. So, they're kind of the digital transformation of AI for large enterprises. Um, and I think those sectors, unfortunately, always kind of lag behind the use cases, right? Like Lovable grows to, 100 million in revenue, and then the security kind of comes after that, right?
Mm.
And not to say that Lovable is an unsecure platform, um, but it's to say that, those the security pieces tend to lag behind, but are just as important, if not more important. And maybe in the future we'll start thinking about them at the onset instead of as a band-aid afterwards.
We always say that. That's always the thing. It kind of reminds me of the whole cloud revolution, 10, 12 years ago, whenever that was. People started going towards cloud and then afterward thinking about the whole security piece, but it just seems like it's happening that bit quicker in this space. But
Yeah.
exciting all the same. Yeah, I think you're right. I think we'll see a lot of GRC engineering type stuff, identity, regulating how we use AI, and a ton of stuff in that world. So, no, very exciting. Matt, thank you for taking the time with me
Yeah.
and
Thank
allowing me
you.
to pick your brain on this space. It's been awesome.
Yeah. Well, thanks so much, James. Really appreciate the opportunity and hope to do it again.
Awesome. Speak to you soon. Take care.
All right. Thanks.